we absolutely know that for the vast majority of people in the UK and the Western world, their primary asset or their primary pillar is the stock market, but they have no clue of how it works. They've got no clue about how to add value and no clue about how to mitigate risk. So we'll share with you tonight some principles. Manish, that, and then I'll dive into the questions and try and help people sort of get to the nitty-gritty of what percentage of their overall wealth they want to hold in the market, what types of markets are there, what different ways can you buy into the market.
Investing is about having a strategy and avoiding mistakes. And we'll go on to avoiding mistakes and how your strategy should be shaped, and that comes down to your end objectives. But you know, you've all heard of the tail, the tortoise, he always wins, right? Slow and steady wins the race, and the tortoise makes very few mistakes, knows exactly where he wants to go, whereas the hare is all over the place and makes a lot of mistakes and doesn't really have a clear plan, it seems. Okay, so that's my core principle, and people do things differently, but you know, for me, it's about the long-term picture, and it's about having the strategy and having your objectives. Don't chase the shiny penny, or don't jump onto the bandwagon, because return is only one side of the coin. Risk is, I would say, even more important. Look at the risk first, and then the return comes second. So here is just a chart talking about actual returns. The previous one we looked at, the risk return chart, was kind of theoretical, or you know, returns that you would expect. These are actual returns over the last 5 years with their risks. Okay, so ideally you're looking for something with low risk and high returns. And you know, one of the reasons I like secured loans as well as global equities, which I have in my portfolios, they kind of give you the best of both worlds.
Always begin, as Manish and I have said now probably 3 or 4 times on this webinar, is begin with that end in mind. So don't get pulled and pushed from ETF to ETF or fund to fund. Just decide what proportion of your overall investing you want in the market. And if you need some help with that, come back to us in your coaching calls and we'll try and help you do that. And then from there, you can start to go to the next level of thought and the next level of thought and the next level of thought. So you don't get overwhelmed, because even though there are only 10 principles here, Manish, you've probably shared or touched on hundreds of different ideas that anybody could go off and do the shiny penny syndrome again on those things. So just take your time and just keep asking questions to narrow down your thinking. But it's turning that wheel of education. That's the key thing.